Well, good morning, YouTube family. Somehow, for some reason, I thought it'd be appropriate that I would set myself a reminder saying, "Is my mic on?" So no dead zones today, I hope. And as I look there, I can see the little bar moving. I should probably do that more often. Be the first thing I check when I log on. So it's Wednesday in Arizona, and I just want to share what I woke up to this morning. I thought it was kind of funny. There's so many scams out there, but check this out. So this is an email I got this morning. Norton Security payment completed. The first thing that comes to my attention is it's $499. I didn't think my Norton account was that much. Not to mention, I don't have a Norton account. And it's from Hal's Homer. Pretty sure he's not the account guy at Norton Security. But he gets real personal. He said, "Hello, user." He didn't say hello, Rick, just hello, user. Auto-generated for another year of success. Hope you've been enjoying our service so far. The debited account will be reflected in your respective bank account statement within the next 24 hours. But if I want to cancel this, I call that 800 number on the bottom. And you know what happens when you do that. They're going to want your banking information. They're going to want all kinds of stuff so that we can make sure that Hal's Homer is not debiting my account. You can also tell when you get up there that they didn't send it directly to me. It was BCC. It was blind copy. So that means that went out to thousands and thousands of people. They keep trying. They haven't got me yet. I'm waiting for my check from Nigeria. So where are we at today? I'm going to go through a couple of numbers. And the intention of this channel, outside of just making you all highly educated, is to let you know what numbers that we're watching in case anything turns. I'll tell you the numbers that we see today and what it means for the next 6 months to 9 months out. Beyond that, it's anybody's guess. I've certainly got my thoughts and ideas that I think might happen, but it doesn't do any good to project it because you just never know. Now in 2006, it was pretty obvious to me what was going to happen. It was obvious to anybody that was looking at the numbers that things were getting ugly quick. And now it's kind of hard to tell. There are a lot of scary things out there in the broad spectrum of our current financial situation in the country. I mean, let's admit, the only reason the country's just kind of going and going is because all of this central bank support and the stimulus spending, and we can't spend our way out of this. So that starts to concern me. What that means for housing, I don't know. There's plenty of YouTube videos out there to tell you it's going to crash quickly. So what I will do is I'll share other people's opinions on what they're writing and let you know what's going on. But every time I look at what everybody's writing, it still boils down to the one thing, and that is what is inventory. Yesterday we had 4,778, and it usually dips back down a little bit on Wednesday and starts to come up through the course of the day. This morning we're at 4,542. So we went down a couple hundred. So Tuesday and Wednesday are so predictable, it's scary. Also looking at, the 7-day moving average that I track, that's pretty predictable too. So you can see here, this blue line are the number of homes that are coming onto the market, and the yellow line are the homes that went under contract. And so I like it when I see the blue line above the yellow line, but it just consistently seems to follow the same pattern. The only time we saw anything radically different was Thanksgiving and Christmas. Everybody stays home. Nobody lists. So that was pretty bleak. So you're hearing a lot of different things about inventory and rising sales, and the housing market's on fire. And so what I like to do when I see that is I like to go, and when somebody says that there's rampant buying activity going out there, I like to go look at the chart and see what it really looks like. So if I go to our local chart here with the Cromford report, this tells the story. This is listings under contract. Okay, if we were having rampant buying activity and frenzied, wouldn't our red line, which is today, be way up here? But we seem to be going along the same pattern of sales as we have in the past 2 years. But let me go back to 2006 if this goes back that far. No, it doesn't. Let's go to 2016. Click that on here and it'll refresh. Give me 2016. No, it did not. You stinky little chart. Try it again. Try it again. Okay, so 2016 is the kind of peach one. So you can see that sales were a little higher here, but for the most part, week after week, I don't see anything jumping out at us. I don't see anything that says, "Here we go." This is showing buyer activity going through the roof. I don't see it. I'm just seeing this many people, which is kind of a normal amount of buyers now looking at this many listings instead of this many listings. So that's going to create a fight. But I'm still saying, and I know you've heard me say this before, especially if you're from out of state and you're going to retire and you're going to come out here, there's some great over 55 communities, and they are not fighting it out in the street for the listings there. So you may get one or two offers that you're competing with, but not 10 or 12. And in some cases, none at all. It's highly possible to get the asking price. So if you're looking at retiring and coming out here, hit me up, because I'm telling you, that's kind of a hidden little gem there. Look at Trilogy and Gilbert, Sun City West. There's some really nice communities. There's no bidding wars. How sweet is that? So what are people saying? Let's take a look here. I'm going to go to the split screen here again. Move the mic over. So there's an article here. What are rates and housing worried about? And I'm not going to read you this whole thing because I could watch viewership drop off like crazy. Terry, I'm a little late. Can you please start over? Yes. Where was I? I got to figure out how to block you, Terry. No, not really. You're quite entertaining. So, the Fed speaks and the rates move. And so people are, now they're saying, well, what does all this mean? So the bottom line is saying, they're expecting the Federal Reserve to taper off on their buying of mortgage-backed securities. And you hear news that says the Fed isn't changing anything in their rate. Well, that can still affect mortgage rates, because if they decide to change their overnight rate, it really doesn't affect mortgages. What affects mortgages is the purchase of mortgage-backed security. Very complicated, but you can see that if the Fed gives any indication at all that they're going to back up on that right now, this is a Treasury yield here. It just spiked up that one day right here. Oh, and it's only because somebody said, there were just 4 members that said that they should talk about it in the future if certain things happen. So they aren't saying that they're going to stop buying mortgage-backed securities. They're just saying, well, if this happens and this happens and this happens, then we're going to have to talk about it. And what they're talking about is if inflation is up and it looks like it's staying, and economic activity's up and unemployment's back down where it needs to be, and it looks like it's staying, then we should have a conversation. And that made the markets nervous, and it made rates pop up. But the markets are starting to talk and anticipate it so much down the road that they're really kind of getting used to it. So, which means we're probably not going to have this huge spike, because there's going to be plenty of warning that it's coming. And here's existing home sales. Home sales have dipped, right? And it says here, how is it that sales keep declining when we're hearing so much about the veritable buying frenzy in many local real estate monthly change in existing home inventory? It says, I skipped a sentence there. It says, the explanation has been and continues to be one of inventory. The following chart shows the monthly change in existing homes. And here it is again. No homes for sale. That explains why this dipped. But when you see that number, you're still going to see articles that explain that buyers are nervous and they're backing off and away they go. They're not going to buy anything anymore. So it's just timing. People know when I'm going to be on my morning podcast here. So here's another thing. Don't believe the headlines. Most pandemic buyers are happy with their homes. You've seen a few articles coming out going, people have buyer's remorse. But Redfin did a survey and they found out that people are very happy with their homes. So you get a headline. It's kind of like the headline I shared with you yesterday that says that The headline yesterday said that these institutional buyers are buying up all these Zillow homes and Open Door homes, and it really only boiled down to 3 homes over a 3-month period in Phoenix. So the headline doesn't really tell the whole story. The headline that buyers have buyer remorse, when somebody actually takes the time to go out and survey buyers, they find out that's a whole bunch of hooey. So nothing going on there. Robert Shiller came out, and he's the guy from Case Shiller, CoreLogic right now. And they had some bad predictions early in the year that they're still getting smacked around. But for the most part, these guys are pretty accurate. And Robert Shiller was somebody that I followed closely in 2005 and 2006 as I was starting to see that the market was turning. And it wasn't turning yet, but you could just see all of this frenzy. And there were landscaping trucks everywhere, construction trucks, all this building going on. And there's not that many people moving to Phoenix. And it just seemed like everybody felt they had to buy. They had to buy or they could never afford again. And Robert Shiller was saying, this isn't good. Look at this number, folks. Look how much inventory is out there. And look at the way this is being financed. This could end badly. I predict a 30 to 40% decline in home values in the next 3 years. So I sold in 2006. And I was glad I did because it tanked. But he was telling everybody that, but very few people were reading it. And then I shared with you that video on Friday with Pat, where what's his name, Diller, was talking about how housing prices are going to go down, and people on the panel were laughing at him. What are you, nuts? What are you drinking? So it's a good idea to read and take a look at other people's thoughts. And here's Robert Shiller. Now, he's on the phone, so he didn't put this in writing. Oops, smack the microphone. He's a Nobel Prize-winning economist, and he's worried a bubble is forming in some of the market's hottest trades. He's notably concerned about housing, stocks, and that word that I don't want to mention on here because every time I do, I end up with all these wild comments, people trying to sell you things. So you know what that word is. It's a coin. So he's seeing a Wild West mentality among investors. And he said, I haven't done that in print. I've been saying that. Even though the record run in stocks and that coin thing has been taking a break over the past couple of weeks, Shiller is worried. He's particularly uneasy about the housing boom. Let's get inside that, shall we? He's saying home prices seem to be driving housing starts. So the price of homes are going up. So the builders are getting in and saying, we need to catch up with this. But he said, we have a lot of upward momentum now, so waiting a year probably won't bring house prices down, Shiller said, because the momentum's already there. And that's what we look at on the Cromford Index. So when we look at a Cromford Index, that measures momentum. And that momentum tells you where pricing is going to be 6 months to 9 months to maybe a year out. And he's validating that here with that statement. He's saying, we have a lot of upward momentum, and waiting a year probably isn't going to bring house prices down. According to Shiller, current home price actions also reminiscent of 2003, 2 years before the slide began. He notes the dip happened gradually and ultimately crashed around the 2008 financial crisis. So he's saying that right now where we're at is where we were in 2003 before the big run-up. So we may not be anywhere close to where we think we're going to end up. And he said, if you go out 3 to 5 years, I can imagine prices be substantially lower than they are now. And maybe that's a good thing, he added. But wait, he's saying there might be a dip in home prices in 3 to 5 years. And he added, not from the standpoint of a homeowner, because your equity is lower, right? But it's from the standpoint of a prospective homeowner. It's a good thing. If we have more houses, we're better off. There's that statement again. If we have more houses. Now, he doesn't go on and elaborate on what can cause more inventory. He's a Yale professor and he's an economist. I wish he would. I wish he would say, if you're going to come out and say in 3 to 5 years that we could see substantially lower house prices, tell me what the catalyst is that gives us more inventory. I'd like to see this. I'm going to watch him closely and follow him. I do anyway, but he doesn't say anything about what could trigger more inventory. I think what he's implying is we're starting to see more building now. We're starting to see more building because prices are going up, and that's going to it's going to make more building show up even faster. And the only reason it's kind of stalling right now is they can't get lumber, they can't get materials, and they can't get labor. Once that all goes away and they start ramping up and building more, maybe that's the inventory he's talking about. Maybe we'll get into some of that overbuilding situation again, and then that'll bring prices down. And the Tallimer says, didn't they predict negative appreciation by the end of 2020? Yes, they did. They said we were going to be down 6%. That was CoreLogic as a group. Not so sure that Robert Shiller was 100% on board with that. Some of his writings were not saying that. So, when you get a bunch of people, the old saying, if you line economists up from one end of the room to the other, they still might not reach a consensus. So, I think CoreLogic as a group just made a big mistake. Robert Shiller, though, right now he's saying he's not putting it in print, but he's talking. So it's interesting if you can read some of the articles he's got. Some of the numbers just aren't obvious. They don't make sense. I used to be in the bread business, and when things crashed in 2008, a lot of our business was in with Bimbo Bakeries, all the Hispanic goods. And I had a vice president. We were supposed to forecast for the next year for our budget on what we were going to be. And I said, our business is going to be down 14%. And he was, you can't do that. You're a sales guy. We can't turn in a lower number. I said, well, look, let's state the obvious. We just had a big economic crash. Our number one grocery store chain that sells our products just filed bankruptcy. I'm not an economist, but that doesn't look good. We don't even know if we're going to be able to sell them the product because we're going to have to be doing it COD at the back door, getting cash. And nope, he made me turn in a 5% increase. And he went in and changed my numbers and changed my forecast. And I said, okay, you own it. And we were down 17%. Sometimes the numbers that you're looking at state the obvious. And this is what I like about what I read you on the Case Shiller report here. Not Case Shiller, but what Robert Shiller is saying. He's saying, look, based on current momentum, prices are going to go up, and it's not going to do you any good to wait a year because prices are going to be higher. So we go 6 months out, we start seeing the same inventory level and the same level of purchases like I show you in that 7-day moving average, then it's going to be another year of the same. One of those has to shake out and change pretty soon. And as I've said, it's easier when inventory goes up to try and go in and find out why than it is right now to try and figure out a reason why it might go up. So if inventory goes up, we're going to look and go, well, what's the age group? Who's putting their houses on the market? Why are they putting their houses on the market? We'll get a much clearer picture. Right now, it's clear as mud. Nobody's putting their homes on the market for a lot of different reasons. Everybody thought as soon as COVID was over and things loosened up that everybody would be putting their house on the market. A lot of prognostication about these forbearance numbers. When these people get out of forbearance, they're going to have to sell their home because they're upside down, or they're going to have to sell their home because they're still not working. We're not seeing that yet. We've got 1 million of them leaving forbearance in June. And there's only 2.4 million homes that are currently still in forbearance. That's nationally. So I think we're 2% of the real estate market nationally. 2 million times 2%, that's not even going to raise. I think I did a calculation that said that if all of the homes in forbearance went on the market, it still wouldn't get us up to what we consider normal inventory. So that's not coming. The other thing we're waiting for, the switch that's going to flip is rental moratoriums over. Is that going to give us more inventory? So we have all these things that we're thinking might give us more inventory, but every morning when I get up and I look, nope, not yet. We keep watching and waiting. So we're going to see what happens. It may bore you to tears. I am picking up my trailer today. I got a camper trailer I'm picking up. And so what that means for you is there's going to be a few days this summer where I'm not going to be online doing a live chat because I'll probably be up in the woods where there's no internet. So I'm going to give that a shot. But I'm building a team to help me. And so I may be out of the area, but I've got people that will help me should anybody have any questions. But I'm the only one doing this right now, little old me. So that's going to be fun. I'm looking forward to it. So everybody have a fabulous hump day Wednesday. Go on and take on the day. Take care.